so much, Keisha and Michelle, for the introduction, for having us today. Once again, give us this great opportunity to be here today. Good morning, everyone. Thank you all for joining us and welcome. My name is Nazanin, and I'm the Assistant Branch Manager at RBC Meeting Places Toronto. As Keisha mentioned, we work very closely with ACCES Employment as we share the same vision, value, and passion for the newcomers community, and really value this partnership. So we're very excited to be here today as we have a very interesting topic today. You know, it's a tax season and it ties very well with our event today. I was a newcomer myself. I went through so many challenges, and as a newcomer, you know, I know that there is so much to do, so much to learn, and I wish that I could attend a workshop like this, like today's, like back in 14 years ago. So that's why we are here today, to provide you with some tips and advice to help you get a better understanding of tax system in Canada. And if you have not done your tax yet, like including myself, I haven't done it yet, but do not leave it for the last minute. And just feel free to ask any question about the tax today. We have actually very special guest today. We're honored to have Arya Aryaran, Chartered Professional Accountant, and we're so lucky to have him today. So, you know, like he's here to share his knowledge and expertise about tax, and we're gonna hear from him very shortly. We also have Ria Ragvi, our banking advisors. We're gonna also hear from her very shortly. We also have Mohan, Sandra Mohan, the branch manager at Kingston and McCowan branch. So he's also here to support us. Thank you so much, Mohan, also for joining us. And we also have Farah Mohammed and Felipe Boada, our newest banking advisor of the team. So we have the whole team here today for support. So now I'm gonna talk about what we have for you today. Here's the agenda of the day. So we already heard from ACCES, and next I'm going to go over RBC's purpose and vision, and from there I'm gonna talk a little bit about RBC's values to get to know RBC as an organization, and then we are gonna introduce RBC Meeting Place where we work. And next we're going to go get into the main presentation. Ari is going to talk about Canada's tax system, tax planning checklist, tips for tax time, and also how and when to file. And it's going to be a lot for delivered today, so just be ready to take your notes, and it's going to be lots of takeaways, and I can't wait to hear from him. And of course, at the end, we are going to get into the Q&A, so please feel free to enter your questions in the chat box at the right bottom corner. If you have any comment, any feedback, any question, please let us know. All right, so let's get started. So as I said, as a proud RBCers, I want to talk a little bit about RBCs. As you can see on the screen, RBC's purpose is helping clients thrive and communities prosper. And our vision is to be among the world's most trusted and successful financial institution. So RBC has around 86,000 employees, so we're all guided by one set of values. So first is client first. We always earn the right to be our client's first choice. So second is collaboration. We win as one RBC, we are partners, and we work together as one RBC to make sure our clients and communities prosper. The other one is accountability. So we take our ownership for personal and collective high performance. Diversity and inclusion, which is really important for us as we embrace the diversity for innovation and growth. So we speak up for the inclusion, we empower people to grow and achieve more. And that's why actually we are such a successful organization. And the last but not the least is integrity. So we hold ourselves to the highest standard to build trust. So that was just a little bit about RBC that I wanted to share with you. Now I would like to hand it over to Ria to talk about, introduce actually RBC Meeting Place. Thank you, Ria, over to you.
Thank you so much, Naz. Good morning, everyone. Hi, my name is Ria. I'm a banking advisor at RBC Meeting Place, and thank you all for joining us and sharing this 1 hour with us to learn more about the Canadian taxation system. So I wanted to share more about the RBC Meeting Place and tell you who exactly we are here with today. So we are a non-traditional branch and a unique branch at that. So a branch designed for the community, by the community, and it starts with my wonderful superstars here. So it's so great to have colleagues that are like-minded and passionate about giving back to the community. So Jeff and Naz are our branch leaders, and Farah and Felipe and I are the banking advisors. So collectively, we all are here to provide the support, the guidance, the resources, and the information and connections to the newcomer community, just to make your settlement in Canada as easy as possible. And then we do have, you know, an extensive support team. I know we're a team of 5 and it's a small team. However, It's an extensive and strong support team throughout GTR within the different branches and different departments in our market and neighboring markets as well. This way, we can continuously reach more clients and communities in our virtual setting. We sometimes lean on our industry experts who are always willing to volunteer their time and expertise. Just like today, we have a great example of the synergy and the cohesiveness of our support team. I'm thankful to Mohan, branch manager of Kingston and McCowan branch, who introduced me to Ari, a CPA CGA, who's here with us today. So we reached out to him to ask for help in planning this tax event. And I explained to him that we needed an accountant for our tax event today. Mohan himself is well known in the community with his connections. He referred Ari to us. And, thank you so much to both of you for being here and sharing this event with us. And especially to Ari for enabling the RBC meeting place to collaborate with you. So thank you all for being here. And our success is contributed with a commitment from our community partners. We have created and nurtured the partnerships with these great organizations listed here. Today's host organization is ACCESS Employment, as you're aware, and they're one of our key partners throughout this incredible journey since we opened our doors in early 2019. So we work together to host, to facilitate, to invite, and to meet the members of the community with these events. Now, in doing so, we're able to help more clients and our communities with the value beyond banking and showcasing the strength of one RBC. So we're also proud of the winning partnership within our communities due to our presence, our team, and especially our events. So it starts with our financial literacy events ranging from fraud prevention, getting and building good credit in Canada, saving for retirement, buying your first home in Canada, and of course today's event, our tax event, all top of mind and relevant interest to our newcomer community. So here we're able to provide the advice on the Canadian banking system based on our experiences and many times with the help of the industry experts, just like today with Ari, the expert on the Canadian tax system. And we then take it an additional step as we also provide advice, just beyond banking and the financial literacy. We're able to do so with our HR tips and tricks, role discovery, just a glimpse of the different roles within RBC. We have job search events, rock your LinkedIn profile, and your brand matters, just to name a few. Again, providing a deeper understanding of the banking industry in Canada. As we know, it varies from country to country and in conjunction with the advice that goes well beyond banking. So I do hope you do have a better understanding of RBC and RBC meeting place. And now for the highlight of the hour and our first guest speaker, Ari. He would like to share a bit about himself and to start with the main presentation, tax tips for newcomers, for those that are filing for the first time as well. So over to you, Ari.
Thank you, Rhea. Thank you, RBC, for giving me this opportunity, especially to Morgan Sundara Morgan for introducing to this platform. Thank you, everyone. Good morning, everyone. How are you guys doing? I know we can't see how you all are doing, but anyway, hope everyone is listening here. My name is Ari Ariaran. I'm a chartered professional accountant working in the industry for more than 20 years in the public practice. I also have worked in various commercial organizations and work with currently I own a practice in Scarborough, and I also volunteer myself with various not-for-profit charitable organizations in Toronto to keep myself occupied after working hours. So that's it for a short bio about me. Let's get started with the tax filing. First of all, next slide. Yeah. First of all, we would like to see who has to file the taxes. So any resident in Canada will have to file the taxes. For tax purposes, if you are a resident in Canada, then you may have to file the taxes in Canada. So today we will be going to talk about some tips and how it will, maybe all the tips may not be applied to you all, but most of the tips will be applied to you all. As a newcomer, you will have to learn lot of things before coming to Canada or after coming to Canada, when you had to apply for the taxes and how you had to do all these things. So I know there may be questions coming up, so I'm happy to answer the questions after the sessions. So as earlier it was announced, you all can put your questions on the chat room and we will be answering your questions. Yeah. Our tax system in Canada is based on the self-assessment principle, which means that you have to complete the tax return each year to report your income and calculate whether you owe tax or receive refund. Many of the benefits Canadians enjoy are made possible through taxes such as paying for roads, schools, healthcare, social security, and public safety. So the Canada Revenue Agency, which administers the tax law for the government of Canada and most of the provinces and territories, it is responsible for collecting taxes and other amounts such as federal, provincial, and territorial income tax, goods and service tax, Canada pension plan contribution, employment insurance premium. The CRA also delivers various benefits and credit programs to Canadians throughout the tax system, which I will review throughout the presentation. How do you determine if you need to file a tax return? Even if you lived in Canada for only part of the year, you may have to file the tax return. For example, you have to file a tax return if you had to pay tax, if you want to claim a refund, if you want to get certain benefits and credit payments, or if the CRA sends you a request to file a return. The Canada tax individuals on the basis of their residency. Residents of Canada must pay tax on their worldwide income, which includes income from sources outside the Canada. Therefore, it is important to determine the date on which you became a resident of Canada for income tax purposes. You become a resident of Canada for income tax purposes when you establish a significant residential ties in Canada. You usually establish these ties on the date you arrive in Canada as a resident. So there are protected persons, including refugees, within the meaning of the Immigration and Refugees Protection Act, people who have applied or received permanent resident status from Immigration, Refugees, and Citizens Canada, people who have received approval in principle from Immigration, Refugees, Citizenship Canada to stay in Canada. If you are a resident of Canada in the earlier year, you are now a non-resident, you will be considered a resident of Canada for income tax purposes when you move back to Canada and re-establish your residential ties. Next slide. You can take advantage of several tax credits and deductions available to you as a new Canadian. We are going to review some tips that are useful, quick reference for the most common federal tax credits, deductions, and tax-assisted programs available to you. Please note that everyone's tax situation is different and the credits and deductions you can claim depend on your own individual tax situation. For example, if you have a childcare expense, you may be eligible to claim those on your tax return. If you incurred medical expenses for yourself, your spouse, or your children, you may be able to claim that credit. There are some restrictions on how you can claim the medical expenses. It's usually over and above 3% of your net income. Generally speaking, you will have to provide basic information such as your full legal name, your address, and all income from last year. That's we will be doing current year taxes for the year just ended in 2021. And everyone, a resident in Canada, will have a unique social security number. So that also we'll have to provide when you file your tax return. make sure you applied for the social insurance number, which is usually identify you for income tax and benefits. Most of the income you earn in Canada will be reported on your T slips, which will be mailed to you or available to download in first 2 months of the year. Usually, all the employers or all other government organizations will give it to you before last day of February, the T slips. If you're already employed in Canada, you will receive a T4 slip from your employer. Your T4 slip will report the income you earned as well as the tax and other amounts that you were withheld and remitted on your behalf by the employer. All these amounts needed to be reported on your tax return. If you have bank accounts or other investments in Canada, you will be receiving various T5 and T3 slips. And if you have any other partnership income, you will get T5013. And if you trade stocks or securities, you will get T5008. The information contained on these slips will need to be reported on your tax return. If you started a business in Canada, then you will need to provide business information, including income earned and expenses paid. If you had any income from outside the Canada, whether it can be employment income, income from real estate, or other investments, since the day you arrived in Canada, you will need those numbers as well. If you have a foreign assets over 100,000, you will need to report them on tax return. There is a form called T1135 for these purposes. If you have dependents such as spouse, children, or elderly parents who live with you and are financially dependent on you, you will have to provide all their details too in your tax return. It is important to keep your address current with the CRA. Once you file the first time, you can create your My account with CRA, which will help you to see what is with you with the CRA. If you are eligible for a tax refund, you can sign up for a direct deposit. Otherwise, check will be mailed to you. Usually, CRA requests for you to give a direct deposit so that the checks will be misplaced or any other purpose, and direct deposit is quicker and faster as well. Next slide. Let's start off focusing on reporting your income. For the part of the tax year that you were not a resident of Canada, you have to report the following amounts: income from employment in Canada or from business carried on in Canada, taxable capital gains from disposing of taxable Canadian property or any other property worldwide, taxable part of scholarship, bursaries, fellowships, and research and grants you receive from Canadian sources. Usually, if you are a student and a full-time student, then the bursaries and grants are exempted for tax purposes. For the part of the tax year you were a resident of Canada, you have to report your world income. World income is the income from all sources, from both inside and outside of the Canada. If Canada has a tax treaty with the other country in which you earn the income, there is a provision in the treaty that prevents Canada from taxing the type of income you received. For example, in some cases, pension income from outside of Canada may be exempt from tax in Canada due to a tax treaty, but you must still report the income on your tax return and then apply the treaty. If you are a protected person, including a refugee, you receive funds from a charitable organization, such as a church, group, or from an individual, you generally don't have to report the amounts on your tax return. However, if a charitable organization hired you as an employee, the employment income you received is taxable. Let's come back to the self-employment. Self-employment income is an income that is earned by individuals who work for themselves. All income earned this way is taxable and should be reported to CRA. There are different deductions that may be available to individuals who earn self-employment income. It is best to consult with the tax professionals because any expenses you incur to earn that self-employment income can be deducted, and on the net income only you will be paying taxes. Pension income. If you are a spouse or common law partner, a resident of Canada, on December 31st, 2021, you can elect to split your pension income that qualifies for a pension income amount. This allows the spouse with a higher income earnings to pay lesser taxes. To make this election, you and your spouse or common law partner must complete the attached form of T1032 to your tax returns. Now let's shift the talk about some of the most common deductions or credits you may qualify for. Goods and services tax, or some provinces it's called harmonized sales tax. Here in Ontario, we call that as harmonized sales tax. This credit is a tax-free quarterly payment that aims to help you to offset all or part of your GST, HST you pay throughout the year for the goods you buy. However, it isn't available to everyone. To qualify, you have to be at least 19 years old, have or previously had a spouse, or be a parent who lives with your child, or previously you are a parent who lived with your child, have a low or modest income, and are a resident of Canada. The CRA will determine if you are eligible for GST, HST credit when you file your tax return. So make sure you file a tax return if you are eligible for the credit, even if you have not received the income in the year. The Canada Child Tax Benefit is a tax-free monthly amount made available to families to help them with the cost of raising children under 18 years of age. The CRA uses information from your income tax return and benefit to calculate how much the CCB payment will be available to you or your children. To get the CCB, you have to file your return every year. Even if you don't have an income in the year, or if you have a spouse or common law partner, they also have to file the tax return every year. So both husband and wife or spouses has to file the tax return in order to qualify to get the CCB. Benefits are paid over 12 months period from July to June of the next year. Your benefits payments will be recalculated every July based on the information from you and your spouse, if applicable, income tax and benefit return from the previous year. Especially if you think about if based on 2021 income, your 2022 CCB will be calculated. Generally, if we talk about the moving expenses, generally the moving expenses are not deductible unless you satisfy certain conditions, such as you have moved to another place more than 40 kilometers and that was the move came in because of the employment purpose, then you are eligible to claim the moving expenses. Canadian scholarship, bursary, fellowship, or research grant attended in that institution, you may be eligible to deduct your moving expenses from the income. However, you can't deduct moving expenses if your only income is scholarship, fellowship, or bursary income that is rarely exempt from tax. Let's come into the next point of RRSP. That is a registered retirement savings plan, where the bank comes into play. The most of the banks help you to invest your money for the RRSP purpose. So you cannot deduct contribution you made in RRSP 2021 if this is the first year you will be filing the tax. Once you file your tax, on the following year, you will have a room to contribute to RRSP. However, if you file a tax return Canada for any tax year from 1990 to 2020, you may be able to claim a deduction for RRSP contribution you made in Canada for 2021. The maximum amount you can deduct is based on the certain type of income you earned in earlier years. It is usually 18% of the earned income, and the maximum limit for 2021 is $27,830. Especially, if you say earned income, so if that you had to work or you had to be a self-employed, that sort of income only qualifies you for RRSP. If you have a dividend income or investment income, that will not qualify you to get the RRSP room. If you make a spousal or child support payments, you may be able to deduct the amounts you paid, even if your former spouse or common law partner does not live in Canada. Lastly, each province or territory has their own set of taxes that credits may apply to you. In the year you immigrated, you usually have to pay to the province or territory taxes where you lived in December 31st, 2021. Usually we have several provinces here. In which province you lived on the 31st of December 20, that day, you will be filing for that particular provincial tax. Similar to the federal tax credits, as an immigrant, you may be limited to the amount you can claim this year for a certain provincial or territorial tax credits. Filing your taxes might seem daunting, but how you are armed with some tips and tricks, it is relatively easy, and you can always reach out to tax professionals for assistance. Even if you are not required to file a tax return, it may be your advantage to file one of as entitled to some of the benefits previously mentioned, such as GST, HST credit, as well as the Canada Childhood Benefit, which will provide you the convenience of having your information set up with the CRA for future filings. The deadline usually for a personal income tax credit is April 30th. The deadline for a self-employed individual to file the personal taxes is June 15, but if you owe any money, you may have to pay by the April 30th. Otherwise, the interest will accrue, although you will not be penalized for filing by June 15th. If the April 30th or June 15th fall on a Saturday or Sunday or holiday, then the due date becomes the next working day, maybe a Monday or the next working day. If you do not file your tax return by the deadline and owe tax, you will be charged interest on your unpaid tax plus a late filing penalty. Interest is compounded daily and quickly adds up. So be sure to file by the deadline. So now what? It's time to take these tips and file your taxes. I know it is not an interactive session, so I have gone through most of the things with you all. Maybe, if you have any questions or anything, I'm happy to answer. And despite living in a digital world, we don't even have cash here. You are going to have some papers, and I know to type up the RBC is here to help you. Make sure your resources are on the CRA web. Most of the resources are on the CRA website. You all can go through that, and these documents are available by T4055, Newcomers to Canada 2021. Thank you, everyone.
Thank you so much, Ari, for being here with us. You highlighted and covered, all the key points and everything that a newcomer should know, or not even a newcomer, someone that's filing for the first time ever. So, you covered all the key points, and like I said, it's very, very important that you do file your taxes. So at this moment, I do want to invite everyone to enter your questions. This is an opportunity that you have with a CPA. You have you have half an hour of FaceTime, actually 25 minutes of FaceTime with him. So capitalize on that. And, just ask your questions. He's here. Thank you everyone for attending. We have such a great attendance today. So thank you all for attending. I do want to take on the questions now. We do have one for Maria. She did message me that she did have to leave early, but I do want to get to her question because I know it's recorded, so I still want to get to her question. She said she moved to Canada in June with her family. When do I have to start the tax payments?
Okay, so she has moved, I assume she moved in 2021 June. So she will have to file as everyone files by the due date is April 30th. So anytime, the taxes has already started, CRA started accepting the tax filings on February, mid of February. So currently we are filing the taxes, so she can file the taxes. So if she has any income after June in Canada, she will have to report that. And prior to that, if she has any income from the country where she came in, that also has to be reported on the first tax return, which is due by the April 30th.
Okay, thank you so much, Ari. And this actually takes me to another question that us at the RBC meeting place, we do get all the time from newcomers. And it's maybe a myth buster that we need you to break that myth, is that they're asking, they're saying that, well, I haven't worked yet. I don't know. Do I need to file taxes? I don't have any income. So they kind of relate not having any income to filing. So I know you covered, the benefits that they would get, the child tax benefits, etc. So I know you covered those into detail, but just if you can break that myth for the newcomers that are on the call, that if they, as soon as they land, say they land in January, would they still have to file before April?
Yes, if they land in January or prior to June, if they file information form, then they may be able to get the GST HST credit. Usually the GST HST credit for the previous year or starts from July and it runs up to the following year, June. So if they file any information prior to that, then they may be able to get the GST HST credit. But they can still wait for the following year to file the taxes. Even if they don't have income, they should file the tax return. Then only they will get the GST, HST credit. And especially if you are in Ontario Trillium benefit, and if you have children, the child tax benefit, all that will come only if you file the taxes. Yeah.
Thank you so much for breaking that myth, because we do get that question a lot. So I'm glad you were able to answer that for us. We do have a great question from Sarah. She asked, if someone borrows money from another person, will that money be calculated under taxables? That's a great question, Sarah.
No, if you borrow money from another person, that's a loan which you are borrowing it. So that is not taxable unless, if you don't repay and it become an income, of course it is taxable. But who is giving you, of course, if you pay an interest, that interest is going to be an income for the person who gave the money. But for you, borrowing money is just a loan which you will be repaying it, that has no taxable income.
Thank you. We have a great question from Faisal. He's asking, I am a contractor working for a company. Oh no, I missed the rest of the question. Faisal, if you can just enter the rest of that question, we would definitely get to it. I'll move on to Sadia. I moved to Canada in November 2021, and I am a landed permanent resident. I'm currently doing my home country's job remotely. I'm not getting my salary in Canada. They pay me my home country bank account. Also, the salary is not Canadian standard. I do not have a bank account in Canada as yet. Do I need to file my taxes?
Yeah, this brings up my earlier point. You moved in November and now you have a resident for tax purposes in Canada. So you are supposed to declare all the money from your home country, convert that to Canadian dollar, and then declare that money in your tax return. And then you had to file that tax return because you are going to be in Canada, whether you work remotely or you work after moving to go back and come back, it doesn't matter. As far as tax purposes, you are a resident in Canada. So you are to report your worldwide income in your tax return. And I think it's beneficial for you to open a bank account. RBC is there for you. You can open a bank account with RBC and then because if your income, maybe, as you said, sometimes the foreign income may not be taxable amount. I don't know the amount. So it may be less than the threshold of the taxable amount. In that case, you will be getting credits such as GST, HST, and the Ontario Trillium benefit because you have been paying rent for the last 1 or 2 months in Ontario. So it's better to file the taxes, declaring the income.
Thank you. I hope you got your answers, Sadia, and by all means, do reach out to Arya. His information is located here, so just scan the barcode or just contact him. His phone number is listed as well. I do want to move back to Faisal. His entire question is, I'm working as a contractor for a large enterprise through an employment agency. I don't get a T4 form. What do I need to prep on the tax return?
Okay, that's a good question because Canada, the tax system works as we self-declare our income. That's the main thing, So you know how much you made in 2021. So you have to just declare that as your income because they don't need to give you a T4. It is you have to go and report your income in your tax return. And if you have spent some money or any other expenses to earn that income, especially, if you had to buy some supplies or you use your cell phone or use some other office expenses or anything, then you can deduct that expenses. And on the net income, you will be paying taxes. When you pay taxes as a self-employed, you will be paying for CPP as well. That is also included in your when they calculate the tax for the year. So that is another part. You, as a self-employed, you'll be start contributing to CPP. So it's a self-declaring system. You have to report that income. Yeah.
Okay, thank you so much. We do have another great question from Nikhil. Is it better to file return along with my spouse or individually? And is it better in case of almost equal income tax liabilities for both of us? So should Nikhil file together with his spouse or individually?
Okay, as far as the spouse is concerned, each individual is paid for their own income. Okay, so only the spouse income is considered for three purposes. One, for GST, HST credit. Two, the child tax benefit. And three, for the Ontario Trillium benefits. All three benefits are calculated based on husband and wife, both spouses' income. So for that purposes, they need both spouses to file the taxes. But whereas all individuals will be paying taxes for their own income. You can file separately, it doesn't matter, but then when you on your tax return, you have to declare the other spouse net income. Then only they can calculate these credits.
Okay, thank you so much. We do have another question here from Sonober. Can I file my tax return myself or do I require a consultant? If yes, what's the process and where can I find the form?
Yes, Canadian tax system is available for you to file. Everybody can file their own. So once, if you wanted to, tax professionals as, like a CPA or anybody, they are required. I just wanted to bring a small note, the tax professional, the CPA is a regulating body in Canada, which requires all the tax professionals to earn CPD credits, so they have to update themselves. So tax system changes every year in Canada. So if you approach a professional, he may be able to help you to file the tax properly, and also may be beneficial to you. You may have to pay some money to him, but then you may get a benefit out of reaching the person. But you are always, CRA doesn't matter. CRA doesn't ask you to file through a professional. You can file by yourself. And if you want, you can go to CRA website and download the tax guide. You can read that one, and the tax forms are available. You can fill it out and you can mail it to them, or then they will assess you. So that's it. Yeah.
No, thank you for saying that, Ari. It's always great to seek the help from a professional, a CPA like such as yourself. I myself, I do file with an accountant, and it's great because that is your expertise. You know the rules and the regulations, you know the law around it, you know what's taxable, what's not, what you can claim. And I'm constantly asking my accountant, can I claim this? Can I claim this? Because I don't know, so I always ask. So it's always great to have an accountant and that professional that you need, because again, it's new. I am, because it's a government, I'm terrified if I mess up anything. So I'm always like, okay, I have to file it with an accountant. But again, it's personal preferences.
Yeah.
If you're comfortable filing, if you understand the taxation law in Canada, by all means. But again, we do recommend that you file with an accountant or a professional.
Sure, you're right.
Yes, thank you. So Faisal, we got to your questions. So if you do have an additional one, feel free to add another. Thank you for re-entering it for me. Okay, so Majid asks, what is the date of landing? Is it the time you entered in Canada as a visitor or a refugee claimant, or is it a date that the person get their PR card? So what exactly would be the date that you count towards filing?
The date first you land at and officially notified by the Canadian authorities or immigration authorities came to know that you have landed in Canada. That's the date you landed here. Yes.
Okay, great. So we have another question here. Sajia asks, how about the gift, the money that we received as a gift? Is that taxable or not? So I guess they wanted you to expand on that a little bit more. So they received the money as a gift. Is that considered taxable?
No, normally gifts are not considered as taxable here in Canada. So if you receive a gift and if you have a proof that you have received that money as a gift, of course, then it is not taxable. And also add to that one, if you win a lottery also in Canada, it's free. It's taxable, tax-free amount. So any lottery billings, maybe $10 or 10 million, it doesn't matter. It is tax-free. That's the only thing. The money you receive in Canada is tax-free. Yeah.
Okay. We have a great question here from Sandra. If my world income that was submitted when I was applying for CCB for the first time in Canada was too high, and I notify CRA about it, I got a reply from CRA asking for supporting documents to enable the adjustment. Apart from the tax return from the other country, what other supporting documents can I provide?
You may have to give maybe the tax filings document from the other country is fair enough. That may be enough. Or we have here T4, for slips are given to us based on our income, something like that sort of a document. If you have anything from your previous country, if you can prove that, and if it's a valid document, CRA will accept that sort of documents as a proof of your income.
Okay. Thank you so much, Ari, and thank you, Sandra. I know there's different components to that question, so if you do want to reach out to Ari personally, feel free to do that. His contact information is here. We have one from Glenda. If you do not have any income yet, do I file tax return even if I've been using my home country credit card and cash savings here? I am a permanent resident.
Yeah, this was answered earlier, but anyway, different way it's coming up.
Yes.
It's better for you to file the tax, then you will get the credits. So if you don't have any income, you don't need to pay any taxes to the government, but you will get credits, a lot of credits, If you are a single person, you will get GST, HST credit and Trillium benefit if you are paying rent. And if you have children, you will get child tax benefit. So filing the taxes will help you to get some money from the government.
Okay. Thank you all for entering your questions. I know these are all personal questions, and I thank you for capitalizing on having an accountant here at your disposal. So, thank you guys so much. These are all questions that I know you want to get answered. So we do have quite a few more, and I want to get to them because I too want to learn. So if you do not have any income, this is from Glenda. If I do not have any income yet, do I have to file tax return even if I've been using my home country credit card? Oh, I'm sorry.
That's the answer.
Sorry. We want to move on to Aziz. How do you define personal money versus income money if someone has money back home in their home country and brings it over here? Is it taxable?
No, when you are when you are coming, and if you bring your own savings or bring your own money, it is not taxable. But if you have earned in that foreign country as an employment or self-employment or anything before you come into Canada, that is taxable, So anything you earn during that year is an income for you, but any savings is not taxable income.
Great. Thank you for expanding on that and, helping them distinguish on that one. So thank you. Hassan asked, I do not work, but I'm receiving a monthly amount from my son to cover my expenses. Do I have to report this amount as an income?
No, if your son is giving you, that's a gift. You are getting it. So it is not taxable, unless you work for your son and if he pays you, of course, then it is taxable. But here it's a gift from your son. It is not a taxable amount.
Yes. So I know we've had quite a few questions around that. So just the bottom line is if you receive a gift, it's not taxable, just to reiterate that point.
Yeah.
Majid asks, as a self-employee, should I deduct the expenses myself from my gross income and declare the net, or an accountant is going to do that?
You have to give the gross income as well as the net income. So on your tax return, you will be reporting your gross income, and then you will be deducting all the expenses you incurred to earn that income, and then you will derive the net income, and then you will report that one. A question is, if you are capable of doing a tax return, yes, you can do. Otherwise, you can approach to a tax professional, and he will be happy to help you out. Yes.
Okay.
And just to add the point, if your income is over $30,000 in any period of time in a year, then you have to register for GST, HST, and you have to start collecting the GST also. That's another complicated matter on a personal income tax basis. So you had to keep it in mind, your threshold for GST, HST is $30,000. If your income just surpasses the 30,000, you had to register for HST. Yes.
Thank you. Just one quick question from Alexis. Is it recommended to file taxes using the online platform? So that's a great question. And just to reiterate, we want you to make sure you're doing your taxes properly. And if you choose to do it yourself, by all means, go ahead. But we do recommend that you seek the advice of a professional and, proceed with that. But Ari, would you like to add anything on that? Just filing taxes using an online platform?
You have explained it. They can do it. If they want, as you said, if you approach a tax professional, he may be able to help you to reduce the tax payable, or he may have known some ways and means of how you can reduce your taxes, or he can get you more credits. So that reason you can consult, but otherwise you always welcome to file your own taxes. And especially, CRA has, has some volunteer tax system, tax preparation systems are available for low-income people. Most of the places CRA establishes tax preparation services. As I'm also involved in the Sri Lankan Accountant Association of Canada. We usually have a volunteer tax system, so to volunteer tax preparation system. To qualify for that or get into that one, there are some certain conditions involved, and if you meet the conditions, you can get the tax preparation done by a professional for free of charge.
Thank you for highlighting that point, because on the CRA website, I learned that you can, there's free tax clinics as well.
Yeah.
So I did send that out to our clients. And if you are in need of that, again, we do have Ari here. You can definitely reach out to him first. But if you need additional advice or, reach out to me and I can connect you to that free tax clinic that I found on the CRA website. So I think we'll probably take on one more question, but I do want to just highlight a great point and a special thank you from Sonova. And they said, thank you so much to Ari. It's a great session. So I echo the same sentiments. Thank you so much for being here. I know you probably need a drink of water because we've just been going and going with all these questions. So thank you so much. We're very honored to have you here with us at the RBC meeting place and with ACCESS Employment as well. So I just want to squeeze in just 2 more questions maybe. Sadia asks, hi everyone, are parents eligible or can file the GST HST credit when their children have the child benefit? So this is a great question because, again, a tax professional would know what you can claim for in conjunction with another, what you can and cannot be considered as a credit. So I'll leave this one to you, Ari.
Can you just repeat the question one more time, if you don't mind?
Are parents eligible or can file the HST GST credit even when their children have the child tax benefit?
Yeah, so each and every individual is eligible for GST HST credit, provided there is an income threshold requirement is there. If your income is more than certain amount, then you are not eligible. But other than that, if you are a resident of Canada and if you are over 19 years of age, then you are eligible to get the GST HST credit. Yeah.
Okay. Just like I said, one more question. This one is from Avinash. If you come in the middle of the year, is there a way to find out your TFSA limit for that year before filing your taxes the following year? Will it be on a prorated basis? This is a great question that I wanted to end on. So I'll leave that one to you again, Ari.
Usually TFSA starts after you get into the year. So I'm pretty sure on the first year whether it is not based on the prorated basis. It is for yearly basis. I may be mistaken, but I'm not sure. But it is based on yearly basis TFSA. Yeah.
Okay. Thank you so much. We do have quite a few questions, but we're at time right now, guys. So thank you all for joining. Thank you for the great questions. If you do want to reach out to Ari, you can go ahead and do so, or reach out to my colleague Nazanin and I. We can get those questions over to Ari. Thank you all for joining. Ari, it's a privilege to have you here. I know this is a busy time for you. It is a busy time. You have 1 more month and then you can breathe again. So
yes.
I don't envy you, but I support you, and I want to thank you again for being here with us, and thank you to Mohan for introducing us to you. So I will hand it over to Keisha just for the final wrap up.
It was a pleasure talking to you all and answering all the questions. Thank you for RBC for giving me this opportunity, especially to Morgan as well. Yeah.
All right.
Thank you, Ari.
Thank you, Keisha.
You're welcome. Thanks.